Welcome back to my 5 favorite people. Hope you guys are doing absolutely amazing. Today, I'm about to give you guys a full course exactly how to use the Robinhood Robo Advisor, or another way to say the Robinhood Managed Account. Now, I am not going to ask for money. This is going to be a free course. I'm going to walk you guys through exactly what it is, how to use it, how it's going to look for your future, and how you guys can be using it to hedge this market, because we are slowly starting to bleed away, and I want you guys to still come out on the top. All I'm asking for, I'm not asking for your money. All I'm simply asking for you to do is to put literally a comment and just say, you could say, hey, I'm interested, I want to learn more, and also just hit that like and subscribe button so that way the content could just keep coming like this. I know that you guys are actually interested, so that way I can make more, and also it incentivizes me to keep making these content. So hit the follow and subscribe button, and that's all I need. That's all I ask for you guys. But without me talking too much, let's go ahead and jump straight into the video, and I'm going to walk you guys through. It's going to be a pretty long course. I'm going to walk you guys through step by step exactly what it is. So let's go ahead and jump straight into it. I'm going to share my screen with you guys. Now, before I even show you guys what it is, I'm going to show you I have started my own managed account, or another way we're just going to call it the Robinhood Robo Advisor. So a lot of people call it the Robinhood Robo Advisor. I have a managed account that has $1,600, and I also have a Robo Roth IRA account. Now, the first question that I want to start off with, I have a full script we're going to go through, but for the Roth IRA, a lot of people have been asking, can you have multiple IRAs? Yes, you could have 10 different IRAs, but the thing is that your limit per year is $7,000 you can contribute into the Roth IRA. You cannot, for example, let's say you have 7 different IRAs. You could only put $1,000 into each one, or you could put $3,500. You cannot exceed that $7,000 limit amount. And if you do exceed it, there's some penalties. You don't have to pretty much pay. You don't want to exceed that $7,000. So I know a lot of people ask, can you have multiple IRAs? Yes, you can. Yes, you also can have a traditional IRA and also have a Roth IRA. So I wanted to get that out the question. But today we're going to be talking about my actual managed account. We're not going to be talking about the actual, we're not going to be talking about the Roth. So I do have a script right here. I'm going to walk you guys through exactly what it is. You can see right here, I'm starting with section 1. What is Robinhood Robo Advisor? And I'm going to be doing an on-screen presentation, walk you guys through step by step. Like I said, a nice full course completely for free. So if you guys like this content, like and subscribe. Now, the first thing, the Robinhood Robo Advisor, literally just an automated algorithm-driven investment service inside of Robinhood. Think of it as like a financial advisor, but instead of being like the very in-person financial advisor, you guys are getting an actual robo advisor. Like there's someone that's actually managing your accounts. There's someone that's actually actively rebalancing your account. They're going to help you tax harvest. You guys can actually control on your own end what you want to invest in, what you don't want to invest in. You can't do particular stocks, but what you can do, let's say, for example, Tesla is not doing pretty well, and you have maybe, let's say, $100 worth of Tesla. Maybe you're like, okay, I don't want to invest into Tesla because I know they have bad earnings coming up. I want to invest into something else. You can actually toggle on and off that a single stock, so that way you don't invest into it. So the allocation that was actually invested into that single stock goes into some other ones. Pretty cool, pretty amazing. Another thing that it does, it helps to build and manage a portfolio based on your personal profile. So what I'm going to do is I'm actually going to walk you guys through. I haven't tried it, so hopefully it actually works. But I'm going to walk you guys through step by step exactly how to set up an actual account, because I know a lot of people are wondering, how do I actually even do this thing? So what I do is I opened up another incognito window. You're going to search up Robinhood strategy. It's going to look just like this. Now, I am on the computer. If you guys are actually on your phone, it's pretty much the exact same way. You guys are going to create an account for Robinhood if you not have already done so. There are so many different brokerages, but I just recommend Robinhood because it's pretty simple, easy, and the fees are pretty minimum. You're going to go and create an account. If you already have an account, just literally click on add, and you're going to just add on a managed account. And you can see this is exactly what it looks like. It says Robinhood strategies that work harder so you don't have to. We'll walk through what this is really quickly. You can see defining financial goals with Robinhood strategies to deliver tailored, expert, and managed portfolio, follow current market trends, and also always know why your money moves and invest with confidence. You can see cutting edge tech meets human expertise. Now, I will say it is managed by robots, what they call it, but there is still human oversee. It's not strictly just robots doing it. There is still a human aspect that does go into it. But now if you were to contact customer support, I'm not going to say you necessarily going to get that human support immediately. I'm sure if you keep diving and keep pressing them, you'll get to a human. But the actual portfolio itself, the rebalancing tool, the tax harvesting, selling out of positions that are not doing well, that actually gets done by an actual robot. So that's pretty cool. Robot, AI, whatever you want to call it. Timing, market insights, get the full context and deeper understanding of each portfolio adjustment. You can see expert minds. Our team of combined 45 years of experience with high network institutional clients. Over 50 years, you can see dedicated team. Pretty cool. So that's why I said there's still that human Still that human insight. Here's some visuals for you guys you can actually check out. Here it says more than a robo advisor. So I was telling you guys, more control. Toggle any stock on or off. Keep your portfolio aligned with your preferences. More opportunity. Take advantage of market moves and mix in stocks and ETFs. More advanced model to adjust your earnings potential with the Monte Carlo simulations. Pretty cool. Now this is a big thing right here. When it comes to fees, you guys, take a look at this. And I'm going to tell you, nothing I say in this thing is financial advice, but I want you guys to do your due diligence whenever you're looking at this. If you guys do not have Robinhood Gold, don't pay attention to this. But $50,000 invested, $50,000 account. You guys are going to pay that 0.25. The percent never changes. It's always going to be 0.25 for not having Robinhood Gold. You guys are going to pay $125 per year. It's not per month, per year. $100,000 account, you're going to pay $250. $250, you're going to pay $625. A $500,000 account, you're going to pay $1,250. Now, with a Robinhood Gold account, it is way worth it because think about this. Look at the difference between $250 and $1,250. That's $1,000 difference. And besides that, you can go get the Robinhood Gold subscription for $5 a month. Comes out, you guys pay like what, $50, $60 a year instead of paying $1,000. It's so much better. And there's so many really cool benefits like instant deposits. If you guys want to change this day trading, you can do margin. There's a lot of things with Robinhood Gold. We're not getting into that. But if you guys had a $50,000 account, guess what? You're paying $125. $100,000 account, you're paying $250. It stays the same, but this, whenever your account starts growing, you're still paying $250. And it actually drops in percentage, it's really cool. We'll get into a little bit more deep dive of this, but I pretty much wanted to walk you guys through what the actual Robinhood strategy account is. Here it is what I was talking about, tax harvesting. You're in on tax advantages. We strategically choose shares to sell to minimize your taxable gains and which to hold for a long-term tax advantage. Hold your gains, harvest your losses. For holdings brought in, we'll aim to incorporate them into limit taxable gains. And as the year ends, we'll total your gains and losses so you can harvest any loss. Pretty cool. Now let's walk through the actual process of setting up your actual Robo Advisor account. You guys are going to simply click sign up. And it's going to take you to this. I'm going to pretty much try to create something. So let's see. I'm going to do this email. Let's see if I can do a password. I think it'll ask for some personal information, but maybe I could... Maybe I could bypass this. I want to get to the part where it actually shows. I'm going to turn this off because I actually don't want it to show my information. So give me just a second. I'm going to stay on the screen. Let me see what the actual next screen shows. Let's see. Okay, yeah. So it's actually asking for my information. So I'm going to just put some stuff in really quickly. And then I want you guys to see, because this is very important. I want you guys to see exactly how to set this thing up. Okay, yeah. I can't get past because it's going to ask for my phone number. That's the only bad part. Yeah. Okay. Well, that's all right. It's all right. We'll skip this part. I simply just can't show y'all. It's all right though. But what I will say, I'll actually go back and show my portfolio. I wish I could actually show you guys the full breakdown, exactly how to set it up. But I'll go back through my portfolio and I can actually show you guys from mine. So whenever you're actually going through that process, like I was showing you, you're gonna put in your information, probably gonna ask for tax information, exactly how much you make per year, and then where the exciting part, it's gonna ask exactly what your risk tolerance is. Are you gonna be moderate? Are you gonna be conservative? Are you gonna be aggressive or highly aggressive? Like, I personally want highly aggressive because I'm very young, so I can take on a lot of risk and still come out in the foreseeable future, having a great amount of money in my account. Or maybe are you like 55, you're getting ready to retire in the next 5 to 10 years. You want to be a little bit more moderate. You don't want to be conservative. You want to be moderate. Or are you 65 and you're like, okay, I want to preserve my wealth and I also don't want to be at a big financial advisor. I'm going to have to pay 2% a year on my account. I want low fees. So I want conservative. I want to be able to keep up with the market, not outperform the market, keep up with the market, get some nice little dividends, be able to play for my life. That's where you guys are going to actually be able to go in. Now, I chose the highly volatile. It's going to be the highly aggressive. So you can see the second my account looks like, and this is pretty cool. I can actually change this and show you guys. It doesn't show on the computer, but on the actual phone, it actually walks you through. And it'll show you exactly what you're investing. It'll give you like a big pie chart, and it'll show you the exact percentages. I'll actually pull it up on my phone. I wish I could show you guys what I was talking about on the computer. But what I'm going to do is I'm going to show you on the phone because I think it's pretty cool, and I think you guys should actually see what I'm talking about. Okay. So you guys can see this is the account. This is exactly what you guys are looking like. If you actually press this, a little pie chart, and on this pie chart, you guys can see it actually walks you through, for example, with growth. I have 33% in growth. For large cap, I have 25% in IVV. Cash, I'm sitting 10%. Value, I'm sitting 8%. Treasury bills, which is ESCO, I'm sitting at 6%. Emerging markets, 5%. You can see Europe. I have Japan. I have mid cap. I have quality. And then I have commodity stocks. It's pretty cool. It's very diversified, which I think is great. Now, the best part is there are still aspects of you being able to track the market. So yes, you are still trying to get the, nice edge. You are still investing into some single stocks like Apple, Google, Microsoft, Nvidia, Tesla, Amazon. Like there's still the fact that you guys still get that nice upside of potential. Whenever the market does good, guess what? You are invested in. You actually have equity in these companies. If I were to go ahead and open up, let's just say, for example, Google. I'm holding Google. I have shares of Google. Yeah, I don't have a full share, but guess what? I currently own 0.14 shares of Google. And the thing is, you guys get to build that position. And you don't have to do anything crazy. And guess what? Let's just say I make $10,000 off of Google. It's actually going to rebalance it. So let's say we're super overly allocated. Google goes up. I'm up 5,000%. It's going to take the gains we made and reallocate it for our portfolio. So that way we can keep those gains going. And that's why the auto rebalancing feature is so amazing with this account. Then this is actually why I also suck with having a script, because I completely forgot I had a script. I completely started going off. So let's go back to the script. Let's see where we are. What makes it different? Designed for beginners who want the handoff investing approach. So the reason why having a managed account is really good. Two things. First off, you guys don't have to try to beat the market. You can simply just invest into the index fund. Yeah, I know a lot of people saying, just why would I not just invest into VOO and just chill and just let it do its own thing? You could definitely do that. We don't have enough actual historical data to see if this thing actually does outperform the market, but that's what I am here for, to see if it actually can outperform, which I do think it can, because if you take a look at the actual holdings, you're still holding some S&P 500 index funds. Like, take a look. Look at my large cap right here. I'm holding IVV right here. This is an S&P 500 ETF. Take a look at the year to date. We're up 11%. But guess what? This is where I think we'll actually outperform the market. If I actually go back and show you guys, look at my actual, mid cap? No, quality right here. Aerospace and Defense. This one actually excited me. I can't wait to get my portfolio up in this one. It's called XAR. Take a look at the year-to-date chart. We're up 31%. Now, you can't tell me this doesn't look just like the regular S&P 500 chart. You guys are going to get that nice quality exposure to single stocks, the ETFs from the S&P 500, and you're also going to get that nice upside potential when the market is performing well. Now, also keep in mind, when the market is having a downturn risk, like for example, these past couple weeks, you're still going to feel that effect, but your actual returns are going to be minimized. You're not going to be having those super huge swings where you're down 10%. Like for example, in my covered call ETF, look at this. For the week, I'm down not even a percentage. For the 1 month, I'm down 1.96%. We take a look. Let's see how SPY is doing actually. Let's see exactly. Let's compare our portfolio to SPY. So for the week, SPY is down 2%. I was down less than 1%. I've been invested. I haven't changed anything. I've simply just been DCAing, adding money whenever I get a chance. And then for the 1 month, I was down 1% or something like that? It's down 1.6. So right now we're outperforming the market. Who knows what we'll do whenever the market's in an upswing? Who knows? Who knows what it does? So back to the script. Oh, sorry, I'm really all over the place. So back to the script. It uses a modern portfolio theory and AI style optimization, accessible for small investors, not just high net worth users. And I thought this was great because whenever it comes to financial advisors, especially like private wealth management funds, they tend to typically take a very nice fee, a 1% to 2% fee sometimes. Sometimes it even ranges to 3%. And a lot of times they require a minimum amount to even get in, like $500,000 or $1 million just to get in. With this, you guys just need, what is it? I don't even know the starting amount. I think it's either $50 or $500. Either way, you guys, if you're watching this, you have either $50 or $500. And if you don't, you need to be in your job working, because we are getting, this economy is going down and you're going to need money. You're going to need dry powder to be able to get into the market and buying at these crazy, amazing dips, you guys. So that's it. The barrier to entry is so small that it's literally just a no-brainer. And I know there are some experienced investors that are also investing into this. I'm experienced. I can go and try to outperform the market. Yeah, I'm probably not going to beat the market. I probably won't. 97% of people never beat the market. But with this, you guys have a chance of doing it. Not saying we're trying to beat the market. What I'm saying is that we can stay up with the market, get some dividends coming in, and potentially have those nice upswings whenever the market is also advancing. And you guys also have the opportunity to hold these single stocks, and you get to watch them actually perform over long term. For example, if you had your Robo Advisor 10 years ago and you invested into Tesla, you'd probably be a millionaire. because you've had money allocated to Tesla, into Google, to Microsoft, to Apple. You've had money diversified to all those. You wouldn't have to try to pick the winning stock. You let the actual robo advisors do it for you and let them handle your money. Let it rebalance, let it tax harvest, and you're sitting duck. You're living great. Okay. This is what I actually skipped right here. So the setup process is exactly how it works, like I was telling you guys. The question is, you're going to be asking your goals. Are you looking for more of a long-term growth or retirement? I looked long-term and growth. My risk tolerance was aggressive, and my financial situation, exactly how much money I have to invest. These questions actually go through and define your investing strategy, how exactly it's going to be made for you. The system aligns you to a specific plan and strategy, conservative growth or high growth, which I am in high growth. Each strategy has a target mix of ETF and possibly stocks. So if you guys will go more of the conservative route, you'll probably just be in more index funds. I'm in more of the aggressive high growth. So I'm in the singular stocks as well as the ETFs and the also emerging marketplace. You're going to build a portfolio. The Robinhood automatically creates the Robo automatically creates a portfolio based on your chosen plan. No manual selection is needed. Everything is auto-constructed, which is perfect. Now, this is exactly where we are whenever I was showing you guys. Portfolio breakdown. You're going to be seeing that you guys get a diversified mix of ETFs covering U.S. stocks, international stocks, bonds, and possibly actual sector holdings. And that's actually what I was showing you guys over here. You guys can see, here are my holdings. You can see my U.S. stocks right here. Google, Apple, Amazon. You guys just take a look and see exactly what I'm invested in. You can see my portfolio allocation. Let's just say instead of having a $1,600 portfolio, I had a $160,000 portfolio. So take this right here and then multiply it times, what would that be, times 100? So, or no. Yeah, that'd be times 100. So I would have $4,000 here, $3,000, $2,000, and you just be racking up shares. Your allocation would say the exact same. You just have a lot more money. You know, that's exactly what it looks like. Just take this, let's just say I multiply it times 100. This is exactly what I'll be holding. It doesn't change. IVV now will be worth $40,000. Meta will be worth $1,000. You guys can see all the holding that you have here. It's insane. They have a great allocation across. Right now, the way it works, whenever you deposit money, I actually deposit $150. What that actually does is that $150 goes into cash. Once it actually settles into your account, it then actually goes and gets invested into the actual sector. So like I told you, your allocation is going to actually get split up 71% into U.S. Stocks. It's going to get 5% into U.S. bonds and then 13% into international stocks. No matter if you deposit $100 or $10,000. That's exactly how it's going to get aligned. You can see the U.S. bonds is just going to be SGov. It is a 5.81% allocation. I'm not necessarily a fan of the actual bond section, but hey, I can't complain too much. You know, bonds going to be what actually keeps our portfolio nice and steady as we are entering into that downturn market. International stocks, these are the emerging marketplace. You guys can see, get a nice little China, some Europe, and also some Japan as well. Really great. Let's see where we are back with our script. I gotta stay on my script because I sometimes get off. If you invested $500 plus, Robinhood may add okay, yeah, this is what I want to show. So you start off, if it's less than $500, you are just in index fund or ETF. So if you're starting with like $50 to $500, you'll just be probably in just IVV and just index funds. Once you do get past $500, say you guys invest $501, that $1 is now going to be invested into single stocks. It's going to be broken down. That $1 is going to be broken down 76% in large cap or in stocks and ETFs, and then it's going to keep breaking down just like that. So at the $500, you can see how it kind of breaks. But even once you get past 500, it's still going to still be able to get allocated. You'll still be invested to index funds, and your majority of your allocation will be in the index fund. You'll still get the single stock exposure, but you'll majority be in the index fund. Stocks reflect your strategy. Why this is built this way, to balance risk and reward factors, which is great. Make sure your money isn't the only one type of investment. Now, I did also notice, I was telling you guys, I don't know how dividends work, but I actually received a dividend from Apple in here. And I don't know if it shows up on the computer, but on the phone, it was nothing crazy. I just want to let you guys know, I didn't receive anything crazy, but you guys can see if it shows on here. See, on the computer, it doesn't show. But if I actually, if you have it on your phone, you guys can actually go and I'll show you guys what it looks like. I'll go here and then I'll change it to say this. What I'll do is I'll go down to my U.S. stocks, Apple, and I'll scroll to the bottom and I actually can see I received a dividend payment of 1 cent, which is pretty cool. It shows up. You guys still receive your dividend just like you would with a regular account. And I don't actually know exactly how it works. I'm guessing it doesn't get, they handle everything. So it doesn't really matter if it's getting reinvested like drip, because even if it goes back into your cash, it's just going to get allocated right back in. Either way, I think it's cool. You still can receive your dividends. You still can, it's great. It's great. You know, some of these companies pay quarterly dividends. Some of them are monthly paying dividends. But the fact you guys still get that exposure is really cool. How the Robo manages your money: automations, continuous monitoring, you guys know what I'm trying to say. Portfolio is being watched 24/7 based on market conditions, as we know. Automatic rebalancing. If one party portfolio grows too much or if it drops too much, the Robo adjusts your holdings back to the target percentages. And I showed you guys exactly what those percentages actually looks like. Like, for example, if we go back to our large cap, you can see here's allocations. You know, it actually gets dispersed and it'll change. Like, for example, Google may not be the number one allocation right now. It could switch and be, who knows? It could be Walmart. Walmart could be our number one allocation. It just, it diversifies. It does it for you. You guys don't have to actually go through and do it. It may use ETF trading to defer taxes. Like I talked to you about tax efficiency, which is great. And this is huge for me because if you guys have watched my channel before, I have a covered call ETF portfolio in emotion-free decision. No panic selling, no FOMO buying, no emotionally driven mistakes. And that is literally what wrecks almost every investor. Me personally, I was investing into Tesla whenever I literally was not 10 years old, in the 10th grade. And I was putting hundreds of dollars in a month. It wasn't anything crazy, but if I would just held a couple $1,000s, I would have hundreds of thousands of dollars. But I sold. I used the money, like I went and bought, I don't even know what I bought. Probably bought some car parts, who knows. But if I would have just held that money, just hold on to it, I would have been perfectly fine. I wouldn't have to worry about nothing. No panic selling, no FOMO buying, and then no emotionally driven mistakes. You guys can still sell your portfolio. Do not think just because you put your money in here, it's locked away just like a Roth IRA. You can still sell. It's a little bit of a tedious way to sell, but you may have to contact support and let them know. But you can still sell whenever you need the money. Like if you're going to go buy a house and you have $100,000 in portfolio, you can sell 100% of the $100,000 and be fine. Yeah, you'll start over, be at zero, but hey, it is what it is. Section 5, fees and minimums. So like I was telling you guys, let's go back over to the actual website. So yeah, it'll be right here. Can I add this actually onto, let's see. I want to see if I can actually add this here. Oh, you can't add it. Okay, that's kind of stupid. Okay, we'll just have it side by side. So a flat 0.25 annual fee on managed accounts. For example, if you have $1,000 equals $2.50 per year. Pretty self-explanatory. If you have $100,000, you can kind of break up and do the math. Exactly what it looks like. It'll come out $250. Minimum to start. Only $50 is needed to open up a managed account. And that's why I recommend, not financial advice, it's $50. You guys got $50. You probably just went and spent $50 on Texas Roadhouse like 3 days ago. I love Texas Roadhouse. But take the $50 instead of going and buying some rolls and some biscuits and butter in your big bag that you got. Simply just take the $50 and put it inside of here. Guess what? It's going to build. It's going to compound. $500 unlocks more. Strategies may include stock positions after a $500 balance, like we had talked about. ETF expense ratios. All ETFs have internal fees common to all robo advisors. These are typically low. You can see sometimes less than 20%, 25% most of the time, especially with ETFs, usually less than 25%. Compared to traditional advisors take a 1-2%. Robo advisor is much cheaper and similar to long-term portfolios, which I think is great. If we go back to the actual fees, you guys can see exactly what it looks like. But also keep in mind, to get that fee that I was telling you guys about right here, you guys also got to remember, you got to have that Robinhood Gold. It's $5 a month. Robinhood Gold. Let me see. Does it show Robinhood Gold actually? Let me see. I want to see Robinhood Gold right here. Come down to and look at the benefits of Robinhood Gold. If you don't already have Robinhood Gold, look at the actual benefits. The new gold standard, supercharged with cash, with rates and products, usually reserved for only the 1%, only $5 a month. Look at the benefits you guys get from this. Make the most of your uninvested cash with a 3.5% APY, which is great. No minimum balance and end up $2.5 million. This is crazy. My bank right now only allocates $250,000 for FDIC insured amount. This one, it does $2.5 million, which is great, which means that it pretty much, they default or something happens, it collapses, you're insured up to $2.5 million. You're pretty good. If you're watching this channel, you probably have less than 2.5 million. And if you have more than that, congrats to you. You're living a great life. I don't even know why you're watching me, but I appreciate you watching me. Let's see. Boost your retirement with Robinhood Gold. You can contribute and we boost. Get a 3% match on your annual contributions. That's $210 when maxing out your 2025 IRA contribution limit. There's more on here. Maximize your money potential. Only swipe that matters. You can see you also can get that Robinhood Gold card. You got to join a wait list, and I simply haven't even heard back from it. I would love the Robinhood Gold card. Unlock private banking. No longer needed for the ultra wealthy. Coming in fall 2025. I'm actually looking forward to this. I don't have it, but I will definitely be using this. Start trading like a pro. You guys can be doing Robinhood strategies. Exactly what we're talking about. Get an expert managed portfolio and real-time market insights. Gold members unlock zero management fees on every single dollar over $100,000. You guys, there's some more stuff on here you guys can check out. But come through here, check it out. Check out Robinhood Gold. Back to what we were saying. Key benefits: no minimums, no fees, no advisor appointments, which is great. Now, there are some downsides, and I'm not sure if I put it on here, but you guys don't get that estate planning. You don't get that 401k allocation. You guys don't get the 403b for your kids. Let's see what else we're missing. Well, you get the taxes, but you don't get like the tax breakdown and stuff. So if you guys are looking for like estate or estate planning and stuff like that, it's not going to be on here. So you may want to contact someone for that one. Just letting you know. We talked about emotional decision making. Risk and limits. Okay, here we go. Your portfolios can still lose money during downturns, which I already talked about. Not fully personalized. No deep human financial planning. Exactly what I was talking about. Estate planning or taxes. You guys get the tax harvesting, but you don't get the actual tax breakdown, let you know exactly what you'll be paying. Limited account types. Now, in the moment, I think they talked about having more account types in the future, but for right now, you only get about 4 different accounts to choose from. Like I told you, the conservative, moderate, aggressive, and aggressive. Underperformance. Robo portfolios often aim to match the market but not beat it, and that's why your series Robo versus S&P 500 is valuable. So I actually have this created, so we're gonna see, and I think this is crazy. I think it'll be pretty cool. We can actually see if it actually outperforms the market. Who knows if it does, but even if it does outperform the market, if it just matches it, we're perfectly fine, because guess what? We got a little bit of dividends coming in. We get the portfolio running, $100,000 portfolio. We're looking good. We're looking good. And one thing I also like about the Robinhood Robo Advisor, if you guys actually come on here and I show you guys this all the time, but you guys can see my managed account right now, $1,600. If I click this little future button right here, you guys can actually see what your portfolio could be ranged to look like in the next 30 years from now. So right now, let's say I don't add any more money to my account. I don't do a single thing. I just let the money compound. In the next 30 years, my portfolio could be ranged from $6.6 thousand to $103,000. Now, I know that is a big range, but it's taking into account what all the worst market possibilities can happen to all the best ones. I always like to look at the best possible outcome, but it also gives you what it looks like most potentially, like what it's probably going to look like, $26,000. Now, we know I'm going to be adding money. You know you're going to be adding money. I like to stay on a little conservative side. I'm going to say, okay, let's say every single month I can add into this account $2,000. We're going to go, we're going to do $2,000. You guys can see. And just let's just do 10 years. In 10 years, it's saying my portfolio adding $2,000, that's it. $2,000, $24,000 every year. My portfolio could be $400,000. Let's go back. $400,000 with a range all the way up to $600,000. Now, this is where it gets exciting. Let's just say 30 years from now. My example, I'm 22 years old. 30 years from now, I'll be 52 years old. I will have a $4 million portfolio with a high of a range of $11 million. Just depositing $2,000 every single month. That's it. Let's just say I'm on the super risky end. I get big deposits coming in. I'm depositing $10,000 every single month. Let's say I got $10,000. In the next 10 years, my account could be worth $2 million with a range of 3.4. But this is where it gets exciting. Let's just say I'm able to deposit $10,000 every single month. You're big balling like that. I want the hands-off approach. I want Robinhood to do everything for me. The next 30 years, by the time I'm 52 years old, I would have minimum $7.5 million with a future projection of $20 million with a high of almost $60 million from depositing $10,000. It's crazy, isn't it? I didn't have to do anything. I don't have to talk to financial advisor. I don't have to do appointments. I don't do nothing. I love this tool. You have to actually go through here. You can change it. You can say, okay, let's do a one-time deposit. Let's say I want to deposit $200,000. I can see exactly how much my account's going to be worth. Let's say I want to deposit $15,000. You can play around with it and see. It's pretty cool. It's a great little tool right there. I'm glad they actually add that. Okay, so let's see. Your ongoing comparison, tracking real-time portfolio over time. You also get monthly and quarterly updates, which is pretty cool. They show up. Let me see if it shows on here. Let me go back. It should show up in the actual notifications tab. You probably have to actually go through and look at it, but on the actual phone, a lot more things pop up. You guys know how it usually pops up like news events right here on the phone. It'll pop up right there. I simply just haven't learned how to use the computer because sometimes I just like to look at my phone. But yeah, you'll get updates and stuff like that. Let's see. Anything else we need to know on here? I'm gonna like skim through. Who's this best for? Okay, this is good. Who is this best for? Beginners with no investment experience, busy people who want automation, long-term investors 5+ years, people who prefer simplicity over stock picking. Now this right here is my thing right here. Long-term investing 5+ years. I'm not going to use this money for the next probably 20 years. So I'm going to let it do its thing. I don't want to touch it. I want it to rebalance for me. I want the tax harvest. I want to do its own thing. It's great. While the market's dipping, I don't have to try to time the market. I don't have to try to DCA. I just put money in, and it does it for me. That's why it's great for me. Not ideal for day trading, people wanting to get complex financial planning, and those who want to pick individual stocks only. Pretty self-explanatory. How to start. Open up the Robinhood app. Go to strategies, manage investing, fill out the questionnaire, deposit funds. Your custom portfolio is built instantly. And then even after that, automatic rebalancing, automatic monitoring, you just deposit and wait. That's it. You got a fly in here, man. Got a freaking fly in here. What's going on? It's the jungle? What kind of house is this? Okay, so back to what we were saying. Managed account. I also have a Roth. Same exact thing. Same portfolio. Same allocation. I'm up and down the exact same amount because I'm investing in the exact same things. This is cool, you guys. Now, the market's been performing really bad. I got in literally as the market was performing horribly. So we'll see what this thing looks like whenever we go through a big downward slope. And I'm going to keep you guys updated the entire step of the way. Like, I'm going to I make videos every single week. Every single week. I don't miss it. I don't miss a week. I made videos since I started this channel. Oh, wrong account, sorry. I've made videos since I started this channel. Now, that's going to pretty much do it. Let me go ahead and stop sharing the screen. That's going to pretty much do it for the video. I hope you guys truly enjoyed. And I want to give you guys free content. I'm not here to be making courses and charging you guys hundreds of dollars for something that you simply could just come on here and listen to me talk about. Now, what I did notice is that no one's talking about this. This is not like a topic that's covered over the internet. People don't talk about it because, first off, everyone tries to outperform the market. People don't want to just sit here and say, oh, I don't want someone to manage my accounts. I'm going to do it myself or stuff like that, which is fine. You can do that. And then also people just simply emotional buyers, just like me. And when it comes to my covered call ETFs, I love to emotionally buy. And simply, I will say straight up, I emotionally buy on my covered call ETF portfolio. And that's why the portfolio looks horrible. We're down $10,000. But we're trying something different. And, I'm young. I'm experimenting. I'm excited about this. It's going to be a completely new journey. I'm going to keep you guys updated my entire journey, just like I do my cover call portfolio. Every single week, I'm going to give you guys updates. If you guys want to see more updates like this, if you guys want a part 2 to this course where I go a little bit more in depth, exactly, some of the fee structures and some of the stuff that we're invested in, go into every single individual stocks, let me know in the comment section, you guys. I hope you guys actually enjoyed this. If you're going to be starting your actual managed account, let me know down below if you guys have any questions or anything like that. I would love to help you. Please hit the like and subscribe button. No more talking.